It's time for the word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee Strategy founder Michael Lee and Bulltick Capital Chief Market Strategist Catherine Rooney-Vera. Great to see you both this morning. Thank you so much for being here. Catherine, these jobs numbers the last month, was boffo, 500,000. We've added more than 1 million jobs just in the last 3 months. But mass layoffs were seen across all sectors as well. Look at Meta announcing another round of cuts after laying off 11,000 workers just a few months ago. The stock is up this morning, almost 2%. There's Goldman Sachs. David Solomon, CEO, reveals he regrets not cutting jobs sooner. The stock is flat this morning. But, you've got a number of corporations announcing layoffs, even in the face of these very strong numbers from the government every month.
Yeah, look, I think the BLS numbers that are coming out, I think the seasonal adjustments and the modeling they're using to reflect the job growths and jobs moving away, I think there's some serious issues with the way that they're modeling the labor force. If you dig beneath the surface, they only sample 60,000 people to figure out how many out of 160 million people are actually working. I think some of their assumptions are off post-COVID. This is a difficult job, and I think the numbers we're looking at now cannot be compared to pre-COVID. Historically, the level of jobs up or down and the unemployment rate, whatever statistical errors there were, you could take the numbers from 6 months ago or a year ago and compare it to today, and there'd be the same statistical errors, and there would be a constant. So the comparison from month over month is something that you could hang your hat on. I think this number is somewhat flawed. I do not believe that there's this strength in the labor market that is being reflected in these numbers. That being said, it's not like the labor market is completely falling apart. But David Solomon said specifically over this weekend that he wished he started cutting employees and cutting headcount and cutting costs in the second quarter of last year versus the fourth quarter. And I think that talks into the deceleration we're seeing in the economy. And I think a place like Goldman Sachs sees that before a lot of other parts of America as deal flow starts to slow down, as trading volume starts to slow down. And then, of course, a very flat and now inverted yield curve makes it difficult for companies like Goldman Sachs to borrow overnight and invest long-term and simply pick up the difference in interest rates there, especially because now they're negative. So I think this is a sign to come. And historically, these unemployment rates have bottomed just a few months before the start of a recession. And if you look back at the last 10 recessions, you had very, very low unemployment rates just a few months before the beginning of a recession. So I think further economic deterioration is on the way.
Very interesting. Catherine said she would be selling some of those winners year to date. What about you? We've had a rally in January. Does that have legs for the rest of the year or no? Real quick, Mike.
I do not believe so. In terms of the sectors invested, I 100% agree with Catherine. That's what I'm invested in. I also own some long-dated treasuries as well as some gold. I think we're in for some rocky roads. I do not think we've seen the bottom. But it really is everything that performed horribly last year has done spectacular this year. I think it's a good time to take some profits unless you're a very long-term owner of some of those assets.
Guys, I think I agree with you. It feels uneasy with all these moves ahead of an economy that is slowing. We'll keep a watch on it, of course. Michael Lee, Catherine Rooney-Vera, great to see you both. Have a good week, you guys, and we'll see you soon. Quick break, and then the surveillance on